and we're shorted, and we're hoping that, Tesla maybe, it's gone up in the last week from $245 to $343. So since the election that Elon basically bought for Trump, the stock has rallied $95. Kind of a crazy move. And so it's kind of time, I feel like it's maybe time to get shorted. It's just, it's a pure contrarian to me. Do I think we're gonna make money on it today? No. But by tomorrow or Wednesday, when we're in Birmingham or when we're in Manchester, I think that position's gonna come in and it's gonna be worth something. Well, we'll see, maybe not. One of the things I wanted to impress upon you guys is that I don't do technical research. I don't do fundamental research. I don't do anything except look at price extreme and look at volatility. If you want on this platform, can you go to the trade page for a second again? If you want on the platform, you can always look at, actually just do me a favor, just go to a chart of Tesla, just where it says charts, just go to a chart, it'll be simple. You can go on the left hand, right there, the icons. If you just go to the chart just for a quick second, just because some people I know are technicians and you want to see, hey, let me see that move you're just talking about Tesla. This is actually not a daily, but we'll set it up so that you can see it on a daily basis, and you'll see it's basically been hyperbolic. That doesn't mean anything to me, and there's no such thing as mean reversion in price. There's only mean reversion with implied volatility, which is mean reversion of fear. But there is such a thing as price extreme, which is completely subjective, which is a reason to make a trade. Yeah, and there you can see the latest move in Tesla. So it's come down a little bit off its high today, but that's kind of the latest move in Tesla. Okay, now let's go back to just scroll up to on the watch list, just so we can kind of scroll back up on the watch list to the top. The other way, so you can again see what's going on. So now the S&Ps are unchanged on the day, the NASDAQ's down a little bit, the Dow and the Russell, so it's kind of a very quiet day right now. So now I'm gonna take you and speed the process up a little bit, because that was like introduction. You're good?
Are you all good? I was just going to slow.
You following through this? Are you following this? Okay. Again, this is a very different kind of event. It's a very different discussion, but you're following, right? Yep. So far, because that was pretty simple. We just sold a call spread in Tesla. All right. Now we said, I promised you, we're going to do a little bit of kind of like everything today. So we're going to look for some stocks that may be cheap relative to other stocks. We're going to look for some things that may be expensive relative to other things. We're going to look for, and these are completely subjective. We're going to look for some things that I think are a little oversold. So we're going to start in the currency marketplace because, I just converted the currency to come here. So let's try it in the currency marketplace. So right now, the euro /6E. Okay, so this is the euro. Now, this, if you, obviously, I'm not sure if people track the euro here or the pound or which one is kind of your primary to look at, but the euro's been annihilated since over the last week or so. It's gone from, over the last 2.5 weeks, it's gone from 112 down to 107 and change. Actually, right now it's in the 106 handle, 106,650. So it's gotten killed. So what I want to do in the case of the euros, I want to go to the December options, and these are the primary. Like we always go to the active month. I'm not showing you the weeklies or anything here. And we're going to go to the 25 delta, which are these right here. And the market is 320, 340. So Rich is going to offer one. Now this is a big contract. It's a $100,000 contract. You're going to offer one at 330, which is mid price. So just click on the bid and change the price to three. Change the price to 3. Did I read that wrong? Where am I? 25 deltas. Oh, it's 310, 340. Offer it at 320, just because I want to be filled.
Okay.
That's it. Just leave it there. Send. Filled. So the nice thing about futures options, because for a lot of you this is your first venture into the futures options world, the nice thing about futures options is that they always fill one tick around mid price. So if the mid price is, let's say the mid price is 320, they would fill at 310. If you're selling it. If you're buying it, mid price is 320, you can buy it at 330. So what Rich is going to do now is he's going to go to the British pound, because we're going to trade them all. So /6B.
6B.
/6B. You're going to open up December options.
So
I'm gonna show you what it means to be product indifferent. These are highly correlated, but in this case, the pound's got you whacked too. So we're gonna go straight over the 25 delta. This is how you take a lot of the risk out of it. And you can see the market's 38.41. Rich is gonna offer one at 40. That's 400/8. I'm sorry, that's 40/8. It's a $500 trade on a $100,000 index, which means if this option goes to zero, we make $500. If it's an out of the money put, and the nice thing about selling an out of the money put, which is this put, did you write it?
That's done.
Okay, so he's working it right here. And the nice thing about this put, when you sell a 25 delta put, is you have a theoretical probability of success of 75%. That's how options work. They're priced in perfect symmetrical theoretical fashion. So if you sell something with 25 deltas, then you have a 75% probability of success. It has nothing to do with what anybody thinks the under. It's nothing to do with fundamental, it's nothing to do technical. It's strictly a statistical, it's basically, it's backing out of the Black-Scholes model. That's all it is. So we call a high probability trade. So he routed it at this price. It's not the most liquid underlying. He's gonna right click, go to replace, and move it down one tick. Perfect. Now let's just see, you're working it at,
Yeah, I'm working at 39.
hold on one second. What price, 39? Leave it there.
Yeah.
That's his offer. They just changed the market. It's 38.39. That's eighths, by the way. Now you're gonna go to the Japanese yen, /6J. I'm doing the three most active, in our world, three of the most sold off, most active currencies. In this case, the Japanese yen is down huge today. It's down almost 500 bips. So what we're gonna do here is we're gonna go to the same thing. So I'm showing you how in this business, everything is just consistency. And if you've never traded Japanese yen before, if you go out closest to 45 days and you go to the 25 delta, you're still gonna have a 75% probability of profit because everything, whether it's Japanese yen, British pound, or euro, they're all priced the same. So what Rich is gonna do is he's gonna go to the 25 delta option, which is this one here, and the market's 250, 270, he's gonna offer a 260 right in between the markets. Just a one line, 260. These are big products, so he's filled.
Filled.
See, sometimes you get filled right between the markets, sometimes, like the British pound, you have to wait. So now, we've waited long enough, because this is, normally at home, you can wait all day. But because we only have, another 45 minutes, what we're gonna do here is, he's gonna take the price, he's gonna replace it, and he's gonna adjust it, down the tick, perfect, send it. He'll be filled. Filled. So, what you're seeing here, and this is all real time, all real money, what we did now is we're starting to create a little bit of a portfolio. So now we've done three currencies. We go back to the position page. Perfect. So now what you see, close up that test, perfect. So now we have short put in the British pound, in the euro, and the yen. All three of those are short puts. All three of those trades, we sold the same delta put. All three of those trades are highly correlated. So we don't want to do any more in that space. That's enough dollar risk. But today the dollar is up big, all these currencies are down big, we sold puts, it's a classic contrarian play. Do I think that's gonna work in the next 2 hours? No. But overnight tonight, maybe the next night, whatever it is, we like those trades. Then we did a Tesla trade. But first I want to finish up in the commodity space, and then we're gonna go over to the equity space. So the next thing we're gonna take a look at, which is down also pretty big today, is crude oil, /CL.
Got it.
Okay, so Rich brought up crude oil. Go back to the trade page. Okay, now a little bit different in here. I have a neutral position in crude oil. It's down big today. You can see here, down $2.30. That's a pretty big down move in crude oil. It's also trading at the lowest it's been in a while, about $68. So what we're gonna do here is we're gonna do a skewed strangle, which means we're gonna sell a put and a call. You only have to put up enough capital to cover one side, so it's not a ridiculous capital requirement. And this contract is a $68,000 contract. So what we're gonna do is, we're gonna go to the 25 delta, same thing, right there. That's your 25 delta put and 25 delta call. Now, that's perfect right there. Because the stock's down big today, because crude oil's down big today, it's not a stock. Because the future's down big today, I'm gonna skew it slightly. So what I'm gonna do here is, I'm actually going to, leave the call where it is, and move the put strike up one. Perfect. So what I did was I added a little bit of positive delta to it, because one of the cool things about this platform is you don't have to go through and click everything again, you just drag to whatever strike you want, and then you can route it. So if you want to make it a little more bullish, you bring the put up. If you want to make it a little more bearish, you take the call down. Or you can move the call up if you want to make it a little, if you want to make it a little more bullish, even more bullish. So what I did was I slightly skewed this. As you can, it's hard to tell here, but it would show a positive delta. But anyway, so the amount of credit received here is 238. That's the mid price. We're going to route it at, let's route 237. We'll just leave it. You can set it. So we're routing it at 237. And let's see if we get filled. Filled. So what you're seeing right now is I'm not hitting bids. Rich is not hitting bids. He's putting these in between the markets. One of the things that's a little different than the way you trade in the OTC markets here is you basically have to take offers or hit bids. In a listed marketplace, on this platform, everything kind of trades around theoretical price about a tick off, because there's so much high frequency competition for the order flow on all the various exchanges that everything trades wrapped right around that theoretical price. So he gave up one tick to fill that, and now he's filled, and you can see now we're short some premium in crude oil. So we've sold a lot of premium already today, because we've sold crude oil premium, we've sold 3 different currencies, and we sold some call spreads in Tesla. This is, I said before, I'm a premium seller, so this is kind of where we are. We're gonna keep moving though. So another thing that's really been super busy today is gold. Gold, you mentioned to me earlier, it's down like $70. So forward, you already have it up, look at that. So you can see right here, it's down $69, hasn't moved all day.
And it's right on the 45-day to expire.
It's a beautiful thing. They can even teach the Scottish.
You're in the wrong room to say that.
I say that everywhere, it doesn't matter. Don't worry, I say we can even teach the New Yorkers, so.
I must say, he did try Iron Brew and haggis today, so big points for that.
Haggis last night, then they had it with eggs at my hotel for breakfast. I wasn't exactly sure how that works. I was confused. On top, underneath, on the side, I didn't know. So, the Iron Brew was good, it's just very sweet. Yeah.
It wasn't the low sugar version, definitely.
Yeah. Okay, so what we're gonna do here is, this is down 70 today. We're gonna do something with, we're gonna set it up as a triangle, but we're gonna turn it into an iron condor. So what he's gonna do is he's gonna go to both the 25 delta again. We're just gonna start the same spot, because consistency, delta selection and consistency is really one of the keys to trading. So you're gonna go 25 delta put, and 25 delta call. Sell them both, perfect. But now, instead of being short this triangle, what we're gonna do is, you're gonna go 2 strikes wide and buy. So you're gonna buy the 26.55s, perfect. And you're gonna do the same thing on the call side. You're gonna buy the out of money call, 2 strikes away, perfect. Now, what that is, that's it right there? Oh no, because you have a future in there already. Yeah, you just gotta get rid of that. No, you're gonna have to redo it.
Yeah, okay.
Yeah, you just had the future in there. Just reset it up. The reason I wanted to show you this is because for those that are uncomfortable with undefined risk, like we just did in crude oil, in gold, I'm doing this as defined risk. Perfect. And just take the other side down. Where you see this line in the middle, this is the current at the money price. That's where gold's actually trading. Now he's gonna take this down, and this is gonna be a delta neutral trade, but instead of having undefined risk, this is gonna have defined risk. So it's 2 verticals. It's short a call spread and a put spread. It's called an iron condor. And in this case, the mid price is 440. So we're gonna be careful here because these markets are kind of wide today. But we're just gonna raise the, what does it say there, 450?
Yes.
Yeah, just put it at 450. Let's see if we get filled.
We actually just went 450 mids. So do you want to go higher?
No, just, we're selling it. So go put it at 450. Let's see what happens. It's only 1 lot. Okay, so we didn't get filled. That's just the mid price. The markets are a little bit wide today because gold's down $70. So now you can lower it a tick, and then we'll see what we get filled, and then we'll keep working this until we get filled. We don't have to do it instantly, but man, take it down to, this is what we call price discovery. And when you're trading futures options, you get filled about a tick around mid price. It's just, it's really simple. It's one of the reasons we like trading those. It's one of the reasons they're so popular and tasty. Okay, so now, and again, we're still just working our way through the futures world. So now we've done 3 different currencies, gold and silver. And we're gonna do one other trade here just to keep kind of the little bit in the game. We're gonna do what we call a pairs trade. We're gonna buy the Russell 2000 and we're gonna sell the S&P 500. Or we can sell the NASDAQ. Let's take a look and see. NASDAQ's down, they're both down today. Actually, I'm gonna do them both. We're gonna have a little fun with it. So what Rich is gonna do is, you're gonna go to the NASDAQ micros /MNQ. Okay? Sell one. You don't put it, just you sit the bid, because these are 1 tick wide. Okay. Filled. Now go to /MES.
My eyesight's going, Tom.
That's okay. /MES.
E-minis?
Yes. Sell one.
Almost
Perfect.
bought one.
Yeah, we've made that mistake before. Now you're going to go to /M2K. It's the micro Russell. /M2K.
Got that.
You're going to buy one.
Buying one of the M2K. Is that right?
No, that's no.
No, that's-
You're buying one. Just go hit buy. Yep. Perfect. Okay, I'll buy another one. I'll buy one more.
You like these, huh?
Yeah. Well, we're gonna get you going faster. Okay. Now,
Keep the same product, I can keep up with it.
I'll buy one more.
That's 4.
I'll buy one more.
5.
I'll buy one more.
I moved the market.
Now sell an MES.
Selling 1 E-minis.
By Friday, I'm gonna have this will be done already. Yes. Now sell one MNQ.
MNQ. Selling 1.
Perfect.
Filled.
Okay, so what he just did was 2 different pairs trades. He got short the S&P 500, he got short the NASDAQ, okay, and he got long the Russell. And the ratio was 2 to 3. I know that sounds like, how would you know that? Well, part of that comes with a little bit of experience of doing this forever, but I mean, it's not rocket science. It's actually listed everywhere and it's published lots of different things on that. But a pairs trade is when you choose 2 different futures that are highly correlated where you think the price has diverged. So in other words, yes, the NASDAQ's had a monster move, the S&Ps have had a monster move, and the Russell is just trying to catch up today. So what we're doing with this trade is we're just trying to play that differential will narrow and contract. It's actually a mean reversion trade because pairs, along with implied volatility, have a mean reverting quality. And so what we did there is we just kind of tighten that up. Now, if you click on this, we don't have any working orders. If you look at the filled orders right here, you can scroll, just click on filled, that's perfect. These are all the orders we've done so far. So Rich is getting a few orders done. These are all filled. The little blue thing with an F next to it says filled. Now again, one of the cool things about the way we design technology is, and this is the only platform in the world like this, is that we haven't changed a single page on this to do anything different. Like everything's always right in front of you. You can even watch this show up here right now. You can see all your filled orders, you can see all your working orders, you can see all your positions. And here are the positions that we've created so far. So we've only done so far 1, 2, 3, 4, 5, 6, 7, 8. We only have 9 different positions on. But 8 of the 9 are futures trades. So 8 of the 9 have a very big, very large notional value. Like those little micro trades that we just did, every single one of those was about $30,000 of notional, and that's real money. I mean, that's real stock. If you bought $30,000 of stock, that would be the same as that micro, or a little actually more in the case of, yeah, it's a little bit more, $40,000 in the NASDAQ, micro NASDAQ. So those are not insignificant trades. Like on just the trades that he's made so far, just in the notional value, now these are highly leveraged, but in the notional sense, he's probably used about a little over $1 million to $1.2 million of notional value. And the reason I tell you that is because it's really important that you understand that I'm not up here worried that Rich just took down the firm. Because once you get comfortable with these products and you get comfortable with the tick sizes and the risk and the non-correlated aspects of it, you're gonna realize that, oh my God, it sounds like a lot, but it's really pretty manageable, depending on how you create the positions. Again, purpose of today was to engage, tease and engage. And that's what we're doing right now. So you're starting to get, you're starting to build a position. I mean, what's a normal position? I mean, a normal position could be, it depends on how much money you have. Like, for some people it could be 50 underlines, for other people it could be 3. But what we like is things that are not necessarily correlated. So what you have here is you see that we're starting to build a portfolio, but in this case, we've done all futures. Now click off these filled orders for a second, and just click on working. Okay, we have no working orders right now. Now we've done, again, in the futures world, we've done 2 different pairs trades and 2 different commodities, gold and crude oil, and 3 different currencies. That's enough in the futures world for just right now. So now we're gonna flip the cards over and go over to the ETF world and then into the equity world. We've already made 1 equity trade, which was Tesla, but now we go into the, a little bit into the ETF world. So one of the things that we, no, scroll down on the market view so you can always see what the futures are doing. The other way. Yeah, one of the things here is that, like, so as a professional trader, our eyes would always be focused on a single marketplace. Like if you ever saw old movies of the trading pits and things like that, you think that traders are watching, watching all these events that are happening all over the world. The reality is that traders really just watch the futures markets. That's it. They're watching one marketplace and they're deciding off that marketplace based on which way order flow is going to come in. There's not a lot of complexity to it. It's really just, how do we look for trades? Well, we look for things that we think are over, at some form of price extreme. But there's another thing too that we do. Can you go to the watch list page, the icon where it says watch list?
Yeah.
Perfect. So this is a watch list that we built into Tasty. And one of the things that we do on here is we use this thing called the implied volatility rank, which is this column right here. For now, this is fine. He chose high option volume stocks, and we have this implied volatility rank. Basically, we can tell with a quick, just a single click, from 100 descending all the way down to 0, who has the highest implied volatility relative to themselves for the last year. This will let us know kind of where is the most action and where's the most fear and where's potentially the most opportunity. So what's happening here, we can look and you can see that Tesla implied volatility right now is at 100, a little over 100, the rank. That means that over the course of the last year, volatility in Tesla has never been higher. So what did we do? We went out and sold a call spread. What should we do in there right now? Maybe we should sell both sides. Maybe we should sell a strangle. Maybe we should take advantage of the only mean reverting number that we really have. So we'll take a look at that in another couple seconds. We'll look at this list and see if there's anything on here we want to trade. Obviously Coinbase is up here today. And some of the other stocks on here, this is, again, just based on option volume. But, Baidu's down, SMCI's down. This is a stock that's been, that's gotten the crap beat out of it. All these Chinese stocks have turned around a little bit lower today. And this is just a list if you're looking for stocks and you wanted something to sell premium in or something like that. Now I said we're gonna trade stocks and options and futures options. So, ready? We're gonna just do a couple things. We'll go kind of rapid fire on this just to show things. One of the stocks that's been beaten up recently is Intel. So you're gonna go to Intel, INTC.
Where are we? Intel, come on. This is my lucky stock at the moment.
Okay, and the stock's down big today. So you're gonna just buy, just click on the offer. Okay, you can see, here's the down move today. We're gonna keep it really quick, short, just buy it. Perfect. Perfect. Now you're gonna go to SMCI.
Ooh.
Another stock that's just beaten down. We're just having some fun. Don't overthink this. If it goes out of business, it's not gonna get out of business today. This time change the volume down to, change your volume number, just go do 100 shares of this instead of 500.
Yeah.
Fine, hit it, send it. Perfect.
Failed.
And then you can pick the next stock.
I am going Nike.
Okay?
Are we buying?
What's that stock doing today? What happened to Nike?
It's it had a really weak day on Friday.
Oh,
so
it's up small,
It's
up
just
52 cents.
yeah.
Sure, buy 100 shares. I just want to show you how the platform, again, the purpose of this is not because I care about 100 shares of Nike. It's showing you, Phil, it's showing you that from the same interface, Rich is trading, he's buying Nike, he's selling options in crude oil, and he's doing vertical spreads in Tesla, all from the same interface, all from the same look, without going to different pages to confuse you. With all the fills. So now we bought a couple hundred shares of Nike, total, in Nike, SMCI, and Intel, just to have some long stock in there, just for fun. Now we're gonna go back to the type in SPY.
Yeah.
So this is an underlying that's been super strong, and I said in the preliminary part, hey, I wanted to short SPY a little bit. So what we're gonna do here is, and again, I'm neutral to slightly bearish in here. So what we're gonna do in SPY is we're just go to the option page.
Options.
So the reason this is interesting is because it's highly liquid. It's the S&P 500. So just instead, what if you want to get a little bit short the S&P 500? So in this case, we're going to go, because the IB ranking here is quite low, so instead of selling premium, we're actually going to buy a put spread. So Rich is going to go to the 600 puts right here, which is 2 strikes in the money. Click on the buy, and then you're going to go to the 595s, which is a $5 wide spread, because when implied volatility is low, we like to buy a little premium. And we're going 1 strike in the money, 1 strike out of the money. It's kind of the mechanical way to do this because you pay the least amount of extrinsic. And the mid price is what?
596.40.
No, you know what? You have the stock here, so you gotta get rid of the stock. Yeah. When you click on the watch list, it'll pop in the stock, so you have to just type in the other, yeah. Just do that.
So
Perfect.
600, 595 put spread.
Yeah, so you, right in the middle, just send it. You probably won't get filled. You'll need an uptick. So now, go back to it again and hit, no, don't change it, just hit similar order.
Okay.
We're gonna leave that one in. Similar order, and now we're gonna raise the price by a penny. Okay, now send it.
Offering at 199.
Okay, now what I wanted to do is show you this. So Rich bid 198, he's right here. He's not filled. So he went a penny higher and put another 5 on it and he got filled. That's how tight these markets are. They're literally 1 penny wide. It's something that's a little bit different than what you're used to, it's the S&P 500, but a little bit different than what you're used to in global markets. In the US markets, in liquid products like that, they're penny wide. He's still bidding 198, nothing done. But he got filled at 199. Okay, just showing you kind of the, how tight the markets are, how liquid the markets are. Right? You can cancel what I don't care about anymore. I just want to show everybody how tight the markets are. And let's go to the QQQ. So this is the NASDAQ ETF, highly liquid as well. And in this case, want to get a little bit short, and it depends on IB ranking. Since the IB ranking here has dropped all the way down to 12, so I have the same approach here. I want to get a little bit short, but I'm going to do something I'm going to counterize this a little bit. So I'm trying not to get too heavy, but I just want to give you I want to give you a taste of everything. I want to give you a taste of everything we've done so far is verticals. I'm going to give you a taste of something that's a little bit horizontal, okay? So what we're going to do here is we're going to the same kind of approach, but we're going to sell the 505 put, okay, in the front month, which is D's. But now you're going to go to Jan, close that up, and you're going to go to the 510 put in Jan, and you're going to buy that. So what we've done here is we've diagonalized this trade to take advantage of low implied volatility and also to buy ourselves a little bit more time and a little bit of a faster decay in the front month premium.
Ooh, I like that trade.
So, well, it'll work if we go down. As you can see here, this trade, doing it 5 times, it has a delta of 38 shares of stock. 38 shares of stock, so you can tell on the platform it has the theoreticals built into it. What's cool about this is you can see that your your delta's 38 shares, and your theta, this position makes about $16 a day on a 5-lot. That's just the premium decay. So it's got a reasonable probability of success, but it has a very nice daily theta. So the mid price on this is 480. We're gonna route it at 480. It's not gonna probably be filled there. And so he's gonna.
Sorry, I offered it 81.
No, you're a buyer, so it's a debit.
81
So
bid.
it's filled. See, sometimes the market moves an uptick. As soon as the market uptick one tick, you got filled. These are highly efficient markets. It's a slightly different world than the rest of the world trades globally. It's just a different approach because it's very active. So you don't have to stay in this thing very long. You don't have to hold these positions forever. These are things that, you know what, you can choose. You can like it now, you can hate it an hour from now. Doesn't matter. Commissions on this platform are the same as we charge in the US, so it's $1 to open and $0 to close. So you know, costs nothing to close the position. And stock is free. So it's like you don't have the same burden of you know, transaction costs. Close that up for a second. Now let's go back to the position tab. Okay, so now you're starting to build stuff up here. Now we have a handful of commodities, then we have 3 stocks, and now we're starting to trade some of the various indices, the Qs and the SPY. But now we still have some money left, which is always, you know, there's nothing you can do with money. And we still have some time left. Okay.
Tesla's hitting resistance at 350, just out of interest.
See that? So let me tell you a little story. So there was this guy, when I started out in the business, there was this kid I became friends with, and he was one of the biggest traders in Chicago. To this day, he's probably the most famous trader in Chicago. Somebody nobody has ever heard of anywhere else in the world. But as a pit trader, he was a master. His mind was just faster than anybody else's. The math he was able to do in his head, long before there were computers, he was able to figure out what every single marketplace should be. He was essentially a walking, talking Black-Scholes model, and he could figure out markets faster than anybody else. And we did everything back then. Nothing was decimalized, so everything was done in fractions. So in the back of his head, he could do, you know, 13/16 minus 5/8, and boom, boom, boom. You know, he'd make a 2-sided market that was a tick wide. Best market maker in the history of any of the Chicago exchanges. So somehow I became friends with him. We just became buddies through a bunch of different reasons. And one day we're walking off the floor, and I was watching this guy trade, and I'm just like, you know, I thought I was a good trader, and then he just destroyed me. He was so amazing. And walking off the floor, and he said, we were trading the same pit that day, and he said, I'm like, I think they're gonna kill him tomorrow. That was what I said. I think they're gonna kill him tomorrow. Meaning they're gonna kill the market tomorrow. And he looked at me, he said, do me a favor, we're friends, don't ever tell me what you think again. Because I don't care what any of you guys think. If anything, I'm gonna do the opposite of anything that you guys think, because you have no idea. And I kind of knew I had no idea, but it took me 20 years to confirm that I had no idea. Now it's confirmed. I have no idea. Nobody knows anything. But that always stuck with me. Like, why would he say that to me? You know, not that it hurt my feelings, just because I was like, I thought I was good, and he's like destroyed me. And I guess what's so fascinating is when Rich has said Tesla's hitting resistance here, I'm like, okay, like that makes me want to get short more, not long. But let's have some fun with this, because there are, like I said, I don't think it's going to do anything much today. But let's talk about some of the things, you know, some of these stocks that have had crazy runs. And by the way, a lot of NASDAQ stocks are down today. NASDAQ's actually pretty weak. I mean, Tesla and Coin are up, but everything else is kind of weak. Some of the things that I wanted to nibble on from the long side were some of the Chinese stocks, which I mentioned before, and some of the tech stocks that I'm looking to start to maybe get a little bit short. Not huge, just a little bit short. Whenever the market has these 1 or 2 stocks that kind of blow the doors off, like today, Tesla and Coinbase, and they're usually off of some binary event like last week's election, I start to think that that's a sign of us maybe being a little toppy, but I don't really know if that's the case. So what I want to do here is just to kind of throw around a bunch of different trades, some things that I think are cheap and some things that I think are expensive. So I'm going to take you through a couple different strategies here as we get towards the 7:30 time. So the first thing is, I'm gonna look at one of the Chinese stocks that I like, which is BABA, B-A-B-A.
Yep.
Okay, so BABA's up a lot today, and well, it's up $1 something. So I want to find something that's down. So let's go to Baidu, which is down 82 cents. So that's more interesting to me today, only because I'm gonna do something that gets me a little bit long. So what I wanna do here is, this is a trade that we came up with in Chicago about 11 or 12 years ago, and it's a three-way trade. We sell a put, and then we sell a call spread. It's a bullish trade, but it has a little bit of an offset against the short put. So what we're gonna do here is, this stock's trading for, what, it's $88? We're gonna sell, in this case, we're gonna sell the 80 puts, just click on the bid of the 80 puts, perfect. And then we're gonna sell a call spread above the market. We're gonna sell, let's see what call spread, the 95 par. So, yeah, just bring that down to, perfect. So what we do on this trade is we sell a put and then we sell a call spread. The call spread that we're short offsets some of the risk in the short put, and it's a three-legged trade. It's called a Jade Lizard. It's a very simple three-legged trade, and the cool thing about Tasty is we don't define any spreads. So it's a little different than some of the platforms are used to, meaning that you can do whatever you want. You can create whatever legs you want, you can create whatever quantity you want. Like if you wanted to sell 2 puts and 1 call spread, you could. If you wanted to widen the strikes, do whatever you want. We don't have any limitations. The entire platform is customizable. You want to create your own spread, create your own version of anything, diagonalized, horizontal, up and down, whatever you want. You can do anything you want. It doesn't know anything. It doesn't have a memory in the sense that it only allows for certain spreads. I mean, if you want to trade certain spreads, there's a list of different spreads. You can see up here, Rich typed on Jade Lizard and it popped up, so it defaulted to make it simple, but you can do anything you want. But in this spread, Rich, we're gonna offer this. You can see it always defaults to mid-price, so Rich is gonna offer this at 281, and we'll route it.
Working.
Well, actually, we're filled. This is a very efficient market. Like, I'm at that order he put in at mid-price. You can see, can you go create a similar order for a second?
50 cents wide, I think.
Yeah, create a similar order. Okay, here's the bid right here, 266. Here's the offer, 298. He went in to do it at 281, which was right at mid-price, filled. So the platform will default to mid-price, so you don't even have to do it you don't have to do it. So everything trades around mid-price. It could be a couple pennies higher, it could be a couple pennies lower, depending on which way the market's going, but everything is theoretically really accurate. Now, what's the good part? If there's no inefficiency, then what's the good part? The good part is you get to do whatever it is you want to do. In an inefficient market, you give away too much to the counterparty. That's why gambling, by definition, with a 5 or 10% edge to the house, is not very, can't make money over the long term. Trading, the markets are wrapped 1 penny around theoretical on everything that's liquid. So you're not disadvantaged to the house. You're not losing money to Citadel on every trade. You're not losing money to Susquehanna. You're not losing money to some exchange, high frequency firm that's at the CME. Everything is wrapped around theoretical. They make money based on scale. You make money based on doing whatever it is that you want to do. You don't have to do anything you don't want to do. And that's the key. So Rich just did a 5-lot Jade Lizard in Baidu. That's cool. We keep moving forward. I'm just trying to find a bunch of different trades so that in a few minutes, we end up with a really diversified portfolio of lots of different underlyings where we've got stocks, options, futures options, everything except digital assets in this one. And speaking of digital assets, we're gonna go to Coinbase right now because it's the most active underlying today because it's going crazy.
Here we go.
So it's up $57. When I woke up this morning, it was up 40 something dollars. Now it's up 57. It's had a monster move. A week ago, can you go to the chart just for 1 second? I mean, I know Bitcoin's going crazy.
And here is our chart.
All on the assumption that in the US, the chairman of the SEC, Gensler, has been a Bitcoin bear, has been a digital asset bear, and he's put a lot of restraints around, a lot of fences around the entire digital asset world. The thought process here is that Trump's going to get rid of him and there'll be a new SEC chair and they'll be much friendlier to digital assets. The question is, friendly is cool, but I don't know, like nobody knows. You know, this is probably a combination of a little bit of a short squeeze and a little bit of maybe being too friendly. But again, this is something that if you were trading just straight stock, you'd be like, I don't want to get short this because what if it's up $50 tomorrow? So one of the cool things about learning how to trade options is you can go to an area that is crazy far out of the money to give yourself, you know, I mean, the numbers are what the numbers are. So like, for example, if Rich goes up here and he says, he wants to go to like, let's just say, let's pick a number, let's go to 20 delta, right here. So the 450 calls, we're trading right now at 329. The 450 calls 39 days from now are up at an insane level of almost $10. And you can see here, the IB rank is 75, which is super high. And the volume today is insane. It's traded, this is a lot for this stock, 32 million shares. So it's interesting because it's in play today. This is a mini binary event. Stock up $57. Stock in the last week is up over $100. I think it was, I want to say it was 230 something before the election. I know, 215 before the election. And now it is, 328. So it's crazy. Where was it?
Oh my goodness, yeah.
Maybe it was 280, 180, and then it jumped up. Let's see.
Yeah,
Tuesday.
$200.
That's Tuesday, Wednesday, Thursday, Friday, Monday. Actually, I take that back. It was right around 190, and it's had a crazy move. It's Coinbase. I mean, you know, they're basically an exchange, and I don't even know how much Bitcoin they actually own. I mean, the thought process is everybody's going to trade this. They're a one-trick pony. I like Coinbase because their CEO puts his money where his mouth is, and he has single-handedly taken on the SEC and other regulatory bodies so that everybody can trade these products. That's cool. But at some point, the stock gets ridiculous. So we're gonna sell those 450s, and we're gonna buy the 460s. We're not gonna do anything crazy. We're just gonna do, you know, a $10 wide spread with the stock up $57 today, and try to make, you know, whatever it is, a couple $100 in the next, you know, day or so, if the stock comes down a little bit. That's all this is. This is not rocket science. Like, I'm not trying to outguess who's gonna be the next SEC chair. I'm not saying, hey, you know what? But we're gonna lower our quantity on this just because the stock's crazy. So we'll go down to a 2-lot. And let's route this trade at $1. I wouldn't go under $1. And the only reason I say that is because the way the stock's moving, let's see what happens.
Working.
Yeah, we're not gonna be filled because mid price is 90 cents. But we're gonna we'll walk it down. Now you can walk it down to 95. I just wanna make sure the prices were not crazy.
Yeah, it's a very wide spread.
Yeah, they're wide spreads. It's probably not gonna get filled here either. So he's probably gonna have to go down to 90. What I'm doing is I'm being really conservative because it's our money and it's real money. And, you know, so we're walking it down. And this is one of the cool things about, there's no limit how many times you can walk it down. Yeah, 90 cents is
So
fine.
mid 992. Do you want to go 90?
Go 90. Let's just get filled. It's only a 2-lot. It's not gonna change our lives. We'll leave it in for a while. Stock probably has to have a little bit of an uptick. Okay? But we'll keep going, because I don't want to run out of time here. So now let's go back to, let's find something that let's go to Boeing for a second, because I'm looking for something that might be a little oversold. So this is a stock that's been killed. Let's put this chart up for a quick second. Here's a stock that got annihilated the other way. And you can see this stock's kind of on its lows, multi-year low. And it's the stock that maybe, you know, if they get a little bit of good news, the stock has a little pop or something, I don't know. But let's go to the trade page. Again, I'm just looking for things that are at price extreme. We're looking for either volatility extreme, which we're not gonna find today, or price extreme. And the price extreme is subjective. So we're gonna go up here, and in the case of Boeing, let's do a little covered call. So let's buy the stock. Covered, yeah, you sure. So what happens here is, now we can pick whatever call we want, so just leave it there, 155. So what we're doing here is, we're buying stock. In this case, yeah, we're buying stock. You can lower the quantity to let's say 200 shares.
Okay.
So we're buying 200 shares of stock, and we're selling 2 calls. Now let's do 300 shares. So we're buying 300 shares of stock, selling 2 calls, doing it as a single order. This is the only time you can pair stock and options together. You're gonna have to lower the price by, do you have that 1-to-1? Because it looks weird.
Selling 3 of the 155 calls, buying 300 shares.
Yeah, why's that price look off? It should be, oh, it's Boeing, I'm sorry, 148, yeah, go ahead, send it. It's my fault, I'm looking at the wrong thing. Okay, you're gonna have to lower the price a little bit by about 3 cents, because covered calls are a little bit weird, but I want people to see how to do a covered call. Perfect, yeah. Should get filled. Okay.
Oh, that's Coinbase.
Oh, you filled Coinbase, beautiful.
Yeah.
Now go back to Boeing, lower it 2 more cents. Sometimes covered calls are like a penny or 2 off. No, just lower the price to 58. Just want to get filled here.
It's coming back down to earth, Boeing.
Okay, let's leave that in for a second, see what happens. So now let's go back to the position page. Okay, yeah, Boeing is a working order right now, so you can see that we're working on it. So let's take a look and see what we've been able to fill here so far. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 different underlines. Now, 17 different underlines is like the basis for building a portfolio. Now, normally, you would never build a portfolio in 45 minutes. Like, it's probably not, it doesn't make that much sense. But this is like an exhibition. Normally, you build a portfolio over the course of a couple of days, a couple of weeks, a couple of months, and it might hold. You might use, you might make a couple of trades a day. You might adjust these trades as time goes on. Like, I didn't adjust any of these trades so far. We just put these trades on just to try to, here, let's just get rid of that Boeing. Either lower it 2 more cents or just cancel. Let's try lowering it first, just so we can see the whole thing. And if it doesn't get filled, then we'll just cancel. Oh, it's my bad. I'm telling you to lower it. I meant to raise it. It's a debit. I'm sorry, we're buying a covered call.
That was my test and I failed.
Yeah, so you gotta go up to you probably have to go up another couple ticks. That's it. I'm sorry, I had you going the wrong way. There you go, my bad. Okay, so now we go back and take a look at the filled orders on this side of the page, right here. These are all the orders that we filled. It's about, oh, you know what? You can go right to the middle of the page. You can show it right in the middle. Actually, you can go to activity. It's one of the icons down in this column over here. One of the icons is activity. Okay, so here you can see, this is all the activity that we just did to give you an idea of just like what we've done in the last 45 minutes. Yeah, you can scroll it, you can see everything. I don't know exactly how many fills it is. Oh, here it is right here, take it back. Today's trades, 25. Thought we get between 25 and 50 just in there, but we're just starting out. But 25 trades with an average notional per trade of probably right around 50 grand with all the futures trades in there, maybe 40 grand, 25 trades, just a little over $1 million in total notional risk we put on. In actual capital use, we'll have a privacy setting on here right now. So in actual capital use, I'm guessing it's going to be right in the neighborhood of about 50 to 60 grand. The leverage to the notional use is a little bit weird when you do something like this. But just to give you kind of some context, because it's not a typical way that most people that are not very active traders trade. But it gives you, can you go back to the position tab for just a quick second? So what this does is it gives you an idea. This is what 25 trades and what is this, 14 underlines? And 17 underlines look like. So 17 different underlines, 25 different trades, about $1 million plus in notional, about 50 to 60,000 in actual real buying power being used, with very little P&L change yet, because as you notice, if you scroll to the top here of the watch list, this has been a very quiet day. When we started, the S&Ps were unchanged. They're up $2 now. So in the last hour and a half, they've moved $2. That's 2 handles. That's a very small move. The NASDAQ is still down, the Russell's still up, and all the trades that we made are still right in the same range. Make sense? Did I lose you? Are you intrigued? Does it change the way anybody thinks about how they trade? Will it change the way you look at the platform? I mean, how many people have downloaded this software? This actually is not a download, this is a web-based platform. How many people have? You have. Like 6. I really encourage you to, when you get back, today, tomorrow, whatever, download the platform. If you have an account at IG, now this is all embedded. So the money, you move right over, you don't have to worry about currency conversion, or that's done on the back end for you. And the cool thing is you can access it right from your IG account, so you can go back and forth from either one. That's the neat thing. Like what we want you to do, the reason we did this, what we want you to do is to go back, check out the platform, put it on your desktop, see what you think. It's very different than some of the technology that you're used to if you haven't traded in US price. I mean, if you've used, like in the past, if you've used like Thinkorswim, or if you've used Tasty Works or Tasty Trade, or you've used any other technology that we've built over the years, it will seem almost second nature. It'll seem very normal. But if you've never used this technology before, you've never looked at these markets like this before, just open it up on your platform. You get it, it's free. Everything, all the content on here is free. All the stuff Rich does in the mornings, all the stuff we do in the afternoons and evenings, your time, it's all free. Like right now, they actually stopped this video, but the guys are, we go all day. We do 17 hours a day of live content. All of our archives are free. Everything that we talked about today.
From you. That's Tom, T-O-M.
You're getting called out even there.
And so,
like this guy who's talking right now, Dr. Jim, he has a PhD in finance. That he was actually a customer that I hired 10 years ago because he tried to convince me that he really knew what he was talking about. It took him 10 years, and now he knows what he's talking about. But he's a super crazy smart guy. We have a lot of PhDs and a lot of scientists on our team that we're a think tank. And all we do is create content for individual investors. And we never charge for anything. Everything is free. Because that's our way of marketing against some of the big firms. Every event we do is free. Everything we do is free. And what we want you to do is not everybody to trade 25 times in an hour or create 17 positions in an hour, but it's to realize that from a single interface that you can download, that you don't have to download, that you can just pop onto tomorrow morning, you can access this within 5 minutes and do everything that we saw here today. If you love this stuff, if trading is kind of your thing, and if you want to expand, your know-how base, Rich is going to be a way better trader after today and tomorrow and the next day, because a lot of this stuff's going to stick with you.
Oh yeah.
Just pushing buttons. You'd be surprised. You make 25 trades, like today, just even though they were your trades, just pushing buttons. So there is a bunch of studies, and I love quoting this one study by University of Chicago study on economic bias. And economic bias has to do with people's inability to make decisions and to take risk. And what they found was if you make 10 trades on eBay, so if you're selling sneakers or tools or cars, whatever it is, your ability to process, think, and make decisions and take risk goes up exponentially. Imagine if you make 1,000 trades, which is nothing. It's 4 a day. Imagine, if you make 5,000 trades. All that happens is you start making decisions really fast and everything starts to look very, very similar. And then the way you think about everything goes from overanalyzing everything to becoming incredibly quick, probabilistic in nature. You think about things probabilistically and quantitatively rather than think about things fundamentally. It'll change the way you think about all different types of finance. And this is just a perfect example. This is like, 45 minutes later, we get a bunch of different positions here. They're not, it doesn't, there's no P&L changes. This money here is just bid-ask spreads. It's nothing. So for a second, you're thinking, well, they took a crazy amount of risk. You know what? The biggest risk, you know, some of these positions are up a little bit of money, some of these positions are down like a few dollars. These are just bid-ask spread. By the end of the day, that goes away. There's no real P&L change at all. There's no real delta change to this portfolio at all. You can see the deltas, these are deltas in here, and it's a relatively flat portfolio net at the end. Okay, I promised you short and sweet. It's short and sweet. We have upstairs, we have like a bunch of appetizers and cocktails and, you know, some beer and some food, whatever they, haggis bonbons. I don't know what they're called. I had my first one last night, so I had to bring that up. But you know, we encourage you to stay around and ask Rich. You know, ask him anything. We have a policy at Tasty, and we're trying to spread this to IG and the rest of the world, which is nothing is off limits. I mean, personal stuff maybe, but he doesn't have to answer if he doesn't want to. But nothing's off limits. So fire off any question you have about anything that we did today or about anything you want to talk about, or email us. And hopefully, you know, you got something out of this, and it changes the way you think about trading going forward. Thanks so much.
Motion.